What if I told you that someone who bought Bitcoin for less than $1 each just woke up and moved over $8.7 billion worth of crypto? And even crazier, the market barely flinched. Today, we're diving into why dormant Bitcoin whales from 2011 are suddenly moving billions while memecoins like BONK surge, and what it all means for your crypto portfolio. Welcome to Crypto Pulse. I'm Alex from Moonward Capital. Hey crypto enthusiasts, if you're new here, Crypto Pulse delivers flash market updates every 12 hours to keep you ahead of the crowd. We analyze the data so you can make better investment decisions. Today's headline is absolutely wild. Satoshi-era Bitcoin whales have awakened after 14 years of dormancy to move 80,000 BTC worth $8.7 billion that they purchased for just 0.78 per coin. That's a 13,800,000% return on investment, possibly the greatest ROI in financial history. But before we dive deeper, let's check the market indicators to see the bigger picture. Bitcoin is holding steady at $108,200, up 0.31% despite these massive whale movements. Ethereum is perfectly flat at 2518, while XRP is up slightly at 2.23. When we look at sector performance, we're seeing some interesting patterns. Memecoins are up 3.36% in the last 24 hours, with data-focused projects showing even stronger gains at 6.71%. NFTs are also performing well, up 5.02%. Market composition shows Bitcoin dominance at 66.3%, with Ethereum at just 9.4%, and overall market cap holding strong at $3.24 trillion. Derivatives are showing mixed signals, with Bitcoin funding rates slightly bullish at plus 0.2843, while Solana has turned bearish at 0.4773. The market sentiment index is currently at 63.76, firmly in greed territory, with social activity showing independence, freedom, and America trending during the holiday weekend. Now let's get into what everyone's talking about, these dormant Bitcoin whales. 8 wallets from 2011 have suddenly moved 80,000 BTC worth $8.6 billion after 14 years of inactivity. This represents the largest ever transfer from the early Bitcoin era. What's remarkable is how the market has remained so stable despite this massive movement. On-chain analysis shows these funds haven't been sent to exchanges yet, suggesting this might be internal restructuring rather than immediate selling pressure. Remember, these early adopters bought Bitcoin at just 0.78 per coin. Talk about diamond hands. In a fascinating contrast to the Bitcoin whale movements, the memecoin sector is showing surprising strength. BONK has jumped 9.17% as its ecosystem expands, with a $200,000 hackathon currently underway, co-sponsored by Radium. The project is approaching 1 million holders, which will trigger a major token burn event. Useless token is up even more at 16.27%, showing that retail interest remains strong despite the uncertainty from these whale movements. While large caps are consolidating, smaller tokens are surging, with Bitensor up 0.57%, Hyperliquid up 3.25%, and Fun Token also posting gains despite the broader market's mixed performance. This divergence between large and small caps suggests we're seeing a rotation of capital rather than market-wide weakness. In a major development that's flying under the radar, the U.S. House has designated July 14-18 as Crypto Week to advance major legislation, including the Clarity Act, Anti-CBDC Bill, and Genius Act. Senator Lummis has also introduced a bill proposing a $300 per transaction, $5,000 annual crypto tax exemption to simplify everyday use. This would eliminate capital gains reporting for small transactions, potentially accelerating mainstream adoption. These regulatory developments, combined with Trump's Big Beautiful Bill that just passed, signal a potentially dramatic shift toward crypto-friendly policies. So what does all this mean for you as an investor? The fact that Bitcoin has barely reacted to $8.7 billion in whale movement demonstrates remarkable market maturity. In previous cycles, movements of this magnitude would have triggered panic selling. The strength in memecoins while Bitcoin holds steady tells us that retail participants remain confident despite large early adopters potentially taking profits. And the upcoming Crypto Week in Congress suggests we may finally be seeing the regulatory clarity that institutional investors have been waiting for. I'm curious, if you found a forgotten wallet with billions in Bitcoin that you bought for less than $1 per coin in 2011, would you sell it all, HODL forever, or take a more measured approach? Let me know in the comments. If you're finding value in these flash updates, smash that like button and subscribe to Moonward Capital for more crypto pulse updates every 12 hours. For those who want to dive deeper, check out our full depth charge analysis on our website, where we explore the great wealth transfer happening between early whales and institutional giants. This is Alex from Moonward Capital, keeping your finger on the crypto pulse. See you in 12 hours for our next update.